A beginner's guide to investing in 2022. Yes guys, welcome back to the channel. My name is Jay, also known as JVSLP, also known as I'm Broke Baby. And like I said, I'm going to be breaking down a little beginner's guide on how to invest in 2022. So you want to invest in stocks and shares, index funds, ETFs, S&P 500. I'm going to show you in this video what these words actually mean and how you can start investing in them. In my opinion, it's so easy to invest nowadays. It's been the easiest it's ever been. I'm by no means an investment expert, but if you invest over a long period, you can see really good returns. The first investment I made was in 2013. I opened an AXA self-investor account. Honestly, it was so complicated. There was so much processes involved. It was on a website. I had to wait to get letters to come back and send them back to them, send my ID over. It was so long. It actually put me off investing for a minute. So I put my initial investment in and I left it for a few years. I didn't even want to invest into stuff like that after that process. But nowadays, like I said, it's so easy to invest. You can literally just do it on an app on your phone. And I'm going to take you through some of them apps and some of the processes later on in the video. So index funds and S&P 500, you hear them all the time on social media. What do they even stand for? What do they actually mean? An index fund is a collection of individual stocks which combine together to make a mutual fund. For example, the S&P 500, which everyone talks about is an index fund, is a collection of the largest 500 companies in the USA. So Apple, Facebook, also known as Meta, Tesla, companies like this are all in the S&P 500. They are grouped together into one mutual fund. So for example, if one company's share price goes really high, but one goes really low, it kind of evens out to reduce the risk of your investment. The S&P is literally just the name of the fund. It stands for Standard & Poor's. So what you are investing in is the Standard & Poor's top 500 US companies. And finally, what is an ETF? Well, to save confusion, we're just going to say it's very, very similar to an index fund. It's a combination of security and stocks to form one mutual fund. You can trade ETFs slightly more easily. However, like I said, it's very easy nowadays to trade both on these phone apps or on these online platforms. So now you know what all the buzzwords means that are being thrown around on social media. How do you actually invest into them? Well, like I said before, it's very easy. You can use phone apps, you can use web applications, websites, which make it simple to put your money in and invest. What I use is an app called Freetrade. It's a very simple app. I would say it's perfect for beginners. It's the one I use on a daily basis. Literally just check it on my phone, check the prices of things. If they've gone down or up, you can set up notifications. It's very simple to use. It's the one I'd personally recommend. However, like I said, there's a lot of other good ones out there. For example, eToro, Trading 212 used to be the most popular one. However, there's a mad long waiting list, so I probably wouldn't even bother with that. But again, you should do your research before you download it. But my personal recommendation is Freetrade. Also, with these new platforms, you can even invest from your ISA account. So if you didn't know already, you're allowed to invest up to £20,000 into your ISA account, and any interest on that will be tax-free. So what a lot of people don't know is that you can actually use that ISA allowance for your investments. So for example, on Freetrade, there's an ISA option. You can put up to £20,000 in there and use that to invest in an index fund like the S&P 500, and any gains on that, you're not going to pay capital gains, so you're not going to pay any tax on that account. The ISA function is pretty easy to use on most applications or most websites. However, there will be a fee for a lot of them. On Freetrade, it's £10 a month. You also get other premium options of the app, but it is £10 a month. So if you're only looking to do an ISA option, then check out your other options, see which one is the most cost effective and the simplest one for you to get started in. But like I said before, Freetrade is a very simple app. For me personally, it's probably worth the £10 just for the ease of use and the peace of mind I've got just having it on my phone, being able to check it, being able to sell it whenever I want. So check out your other options, but Freetrade is also good for the ISA one as well. So hopefully now you found a good platform that you like, simple and easy to use. However, how do you actually buy a stock? How do you even buy a mutual fund? Do you have to buy the whole share or can you buy part of a share? Well, I'm gonna answer them questions for you now. So on most platforms, once you verify your identity, you can just make a bank deposit, you can link your bank account, and some platforms will even give you a interest percentage for holding your money in their cash balance in their account. So Freetrade on the premium version, I think it's about 3%. So let's say you put in £100 from your bank account, you leave it in your cash balance in the app, you want to start buying some stocks, some shares in companies. Facebook is £200 right now, time of recording. A lot of people think you have to spend the whole £200 to buy one share, but you can actually buy a percentage of the share. So we have £100, we can buy half a share. How you would do this, you'd click on Facebook, you'd press buy, then you put in £100, it will tell you how much percentage of the share you're gonna get. So right now that would be half a share. We place what is called a buy order. The buy order will complete once the US market opens. So I'm recording on Saturday, the market won't be open till Monday. So your buy order will complete on Monday. Monday morning, you'll get a notification saying your buy order has been complete and now you own half a share of Facebook. It's basically the same process when it comes to selling. So if you want to sell one of your shares, do the same thing. How much of the share you want to get rid of. If you want to get rid of £100 of the share, put in £100. And what you do now is create a sell order. You'll press sell. Once the market opens again, it will sell for the current trading price of that share. Again, it is the same process for investing into one of the index funds. You will just put the amount you want to invest into the index fund and it will give you like a share price, similar sort of share price that I said with Facebook, and then you'll just press the buy order and it will complete once the market's open. So again, it's not financial advice, but generally when you're investing over a long period of time, the returns can be life-changing. Buy low, sell high is very cliche, but people say it for a reason. That's what you should be doing. So for example, if I had £1,000 to invest in some stocks and I put that £1,000 in the app, what I would be doing is not investing all of my money at once. So the market could be high right now. I'd wait for the market to drop a bit. Then I might put 20% of that £1,000 into the stock I want to buy. Then I'll leave it for a bit. If the market drops again, I'll do the same thing, put 20%. It might drop a little bit more a week, put 20% until all my money is invested. So that way, over that period of time, you'll have an average share price of what you bought at. This is called dollar cost averaging. It's a very simple strategy. And the benefit of that is, say if you invested that £1,000 all at once into a share like Facebook, Facebook actually dropped 25% over the past week, so you would have lost 25% straight away. If you'd done the dollar cost average strategy, you would have seen it drop a little bit, maybe 15%, you would have invested 20% then. It might have dropped another 10%, you would have invested 20% then. And now if it keeps on dropping, you're just going to be trickle feeding your money in. So by the end, you've got a lower average cost, and then hopefully when Facebook goes up again, if it does, that means you bought at a lower price than someone who just whacked a whole £1,000 in as soon as they put the money into the app. So guys, I hope this video has helped you and helped you know that investing is not that scary. It's very, very accessible nowadays and very simple. You have pages like mine that will show you the basics. Then you have pages that will show you more complex investment knowledge, news, everything's at your fingertips. You just need to take the plunge, open an account, get started. You never know, in 10 years time, you could be looking back on this video thinking it's the best thing you've ever watched. That being said, thank you for watching the video. Make sure you drop a like, subscribe, and remember, I'm broke, baby.